The bears remain dominant in the Nigerian stock market as global equities sway to trade wars between the US, China and Turkey. Federal government expresses commitment to supporting the takeoff of the Train 7 initiative of the Nigerian liquefied natural gas plant, plus 40 million rural dwellers to gain insurance cover, even as smallholder farmers get another offer aimed at reducing exposure to risks. This is Business Express coming to you from our Abuja studios with me, Muplang Dakok. And today we'll be looking at state of the Nigerian economy and prospects for the week. Thank you for being there. Socio-political events and style pressure have continued to drag down the Nigerian stock markets despite a positive closure Friday. Its year-to-date figures show a negative of 7.7%. Amina Nujem brings us up to speed on that.
Activities of the Nigerian Stock Exchange for the week ended Friday, the 17th of August 2018, saw the O-share index appreciate by 0.51% to close at 35,266.29 basis points. 1.147 billion shares were traded in 16,649 deals. This was valued at 12.546 billion naira, while market capitalization stood at 12.875 trillion naira. The gainers table were led by international bureaus, Portland Paints and Sovereign Trust, while the losers table were led by Nemet, Secure Electronic and Sky Bank. Trading in the top three equities, namely NEM Insurance PLC, United Bank for Africa PLC and Mansard Insurance, saw a volume of trade at 360.623 million, valued at 1.967 billion naira. Financial services industry saw a volume of trade of 891.785 million shares, valued at 8.251 billion naira. This was followed by the consumer goods industry with a volume of 79,149 million shares, valued at 2.631 billion naira in 2,931 deals. The conglomerates industry followed with 60.294 million shares, valued at 93.993 million naira in 694 deals. Exchange-traded products saw a volume of trade of 1,793,000 shares in 9 deals. Federal government bonds saw a volume of trade of 2,647,000 shares that was valued at 2.725 million naira in 17 deals.
The National Bureau of Statistics has again affirmed that Nigeria is out of recession, and at no time has it stated otherwise. This is coming after media reports suggest that the Statistician General of the Federation, Yemi Kale, through an electronic media, said the economy was still in recession. The Bureau, in a statement, however, maintained that the economy is in the second stage of recovery, heading towards sustainable growth, which is the last stage and should not in any way be mistaken as being in recession. The statement, signed by Sunday Icheji, Head Public Affairs and International Relations, states that economic growth measured by GDP has remained positive since the second quarter of 2017. Still on financial matters, the transaction in the insurance industry remains undaunted. As reforms in the insurance sector continues, the National Insurance Commission, NICOM, explains that it has already mapped out development strategies that would accommodate about 40.1 million adults in rural areas that are excluded from any form of financial services across the country. The development expert says portends a huge opportunity for the sector, especially as it would move the industry towards the 16 trillion naira total asset base target for the year 2020 if actualized. But this could only be realizable if the industry's potentials are well harnessed alongside the plan. National Commissioner for Insurance Mohammed Kari says insurance practitioners have not been able to flood the market with enough risk covers, and this is a major reason researchers describe the Nigerian insurance sector as grossly untapped, with less than 1% of Nigerian housewives having insurance cover, even though the industry had been in existence for close to a century. Speaking in Uyo, Akwa Ibom State, Kari said statistics have it that the Nigerian adult population is 96.4 million, out of which 59.6 million are living in the rural areas. Among the rural populace, 40.1 million are excluded from any form of financial services, and the Nigerian formal sector provides income to only 7.9 million adults, representing 4.2%, whereas 41.6% are excluded from financial services, particularly insurance. And still talking insurance, there is a deliberate effort to give insurance cover to smallholder farmers to better safeguard them against risk along the agricultural value chain. To this end, the Nigerian Incentive-Based Risk Sharing System for Agricultural Lending, NISL, has developed a strategy which improves on its pioneering Area Yield Index insurance introduced last year. It is especially targeted at smallholder farmers, the most vulnerable segment in the agricultural sector and the Nigerian population as a whole. The new insurance product, an innovative form of revenue insurance, is designed to mitigate the impact and losses of both yield risk and market price risk. Beyond the benefits to farmers, the comprehensive cover will also encourage financial institutions to lend more to primary production and ensure reduced premiums in comparison with the earlier version. Managing Director of NISL, Mr. Aliu Abdul Hamid, stated that the goal is to expand insurance products and coverage for agricultural lending across the entire value chain by growing coverage from about 500,000 to 3.8 million primary producers. The scheme is in collaboration with NICOM and Nigerian Agricultural Insurance Corporation. Professor Uche Uwaleke of Nasarawa State University joins us to discuss happenings that are helping to shape the economy. You're welcome to Business Express, Prof.
Yeah, thank you for inviting me.
All right. Let's begin from the capital market. What exactly is happening to stocks in the country?
Well, the equity segment of the markets, you know, for some time now has been on a downward trend. Up till Friday last week. It was only on Friday that we saw, if you like, a spike in the index by as much as 1.87%. But prior to that time, we've had this downward trend. And even today, I understand the market also gained. The market gained by 0.2% today. And that's primarily because Dangote Cement gained. There was also a situation on Friday when Dangote gained 6 naira. Dangote on Friday opened at 214 and closed at 220. It was Dangote Cement that lifted the market on Friday. We are also having the repeat of that today, with Dangote also closing at 229, gaining about 4%. So for last week, the market drops. The market ended in the red, in spite of the gain we saw in Dangote's stock. Dangote's stock was not able to really take the market off the of the negative territory. So the market closed negative 0.51%, last week. As I said, it was only on Friday that it gained. If you look at the other indices too, market bread, for example, has been negative for most of the time. Even today too, market bread was negative, where you have more decliners than gainers. You have more losers than gainers, each day. And of course, all of that has been as a result of the political situation, the political temperature. Heightened political situation has kept a lot of investors, on defense, and of course, we also witnessing foreign investors exiting because of the uncertainties, in the economy. But of course, the global scene too has contributed, where interest rates are going up in the U.S. and investors are also taking flight in search of higher returns in the U.S. So these are the factors that have contributed to the...
So do you think regulators need to do more to curb this continuous depreciation in the market?
Yeah, when you say regulators, I'm sure you're referring to the Apex regulator, the SEC, or even the self-regulators, the exchanges themselves, they are self-regulators. But it's not about regulation this time. It is about the macro environment. Okay, it's the macro environment that is shaping, and the political environment that is shaping, the performance of the market. So, what the moment in my view, as soon as the political tension gets reduced, particularly after the primaries, I am thinking so strongly that after the primaries, the political tension will have come down, and we may begin to see, some form of rally, in the equity segment in particular. Now, you notice that in spite of the relatively good performance of some of these companies, they've released their H1 results, half-year results, and some of them have released good H1 results, but that has not been enough to lift the market. Look at some of the companies, first Zenith Bank, for example, GTB, Stanbic IBTC for banks, good results, and yet their stocks are not responding as one should expect them to respond.
Prof, you talked about Dangote helping the markets to go in the positive way. So can you talk about the segments that are making the markets to go down?
Yes, when we say bellwether stocks are stocks that really show direction. They determine the direction of the market, and they're largely high cap stocks. Dangote is obviously one of them because it accounts for nearly 30% of markets equities market capitalization.
Professor Uche Uwaleke is still with us in the studio. We'll come back again to continue our discussions. So as we count down to the Salah festivities, Nigerians are not left out in final preparations ahead of the two-day holiday declared by the federal government. Bosede Ebel in this report takes a look at what and who is driving local purchase and the economic implications.
Preparations for the Eid Kabir celebration in the Federal Capital Territory is on top gear, especially with buyers catching up with last-minute purchase. Right now, I'm at Area 11 here in Gariki at FCDA Market. Well, with me is one of the sellers. His name is Husseini Abubakar. He's here to tell us the prices of the rams and patronage.
Now we have some 80,000 ram, we have some 90,000 ram and 100,000. So, and then we have the medium ones like 45, 50.
Now, can you tell us how much does this one cost now, this particular one?
We say this one 90,000 naira this moment now. The highest is not even reached up to 15 minutes now. Somebody is buying it. This one?
This one is a 60,000.
Okay.
This one 55. That one 60. This one 55. This one 60.
Wow. So before now, how much do you used to sell before this time?
Before salary, I passed 30,000, 35, 40.
From the Ram Market at FCDA in Area 11, I am here at the Gariki Modern Market where people are seen going about their daily activity. Today being the eve of Eid Kabir celebration.
It's a little bit reasonable, not so high and not so low.
Which of the items are?
The tomato, they are selling the basket for 10,000, and the pepper 1,000, 1,200, depending on the one you are going for.
Basket.
Yeah, the onion too 1,000.
There's no difference in prices except for carrots. That I think because it's not in the season, so that's just it. But other prices are just the same, and the marketers too, I think they are considerate enough.
Before now, we sell a model of rice at the rate of 600 naira, but because of the festive period, we are now selling at the rate of 550 naira. Before now, we sell beans at the rate of 500 naira per model, but because of the festive period, we have now reduced our price to 350 naira per model. Also, we sell red beans at the rate of 700 naira, but because of the festive period, we have reduced it to 550 naira. And that of oil, we sell at the rate of 850 naira, but now we sell at the rate of 750 naira because of the festive period.
While others are lamenting about poor patronage and lack of funds, which is always the case with business, both the traders and buyers are optimistic to make sales and purchase items at the end of the day. That's the situation of things here at the Gariki Modern Market. I am Bossade Abel. Back to you, Muplan Dakok, in the studio.
Thank you, Bossade. The federal government says it remains committed to supporting the commencement of the Train 7 initiative of the Nigerian liquefied natural gas plant. Minister of Finance Kemi Adeosun, who gave the assurance during a visit to the NLNG plant in Finima, Boni local government area of Rivers State, noted that most critical need from the government as a shareholder was support for the investment to commence. The minister said she was in Boni to inspect the NLNG facility that had been generating huge revenue in taxes and dividends to the government, describing it as impressive and a modern high-tech plant. The plant has trains 1 to 6, and the minister said the incoming Train 7 has the potential for creating 10,000 jobs in the next 9 months that would be sustainable for the next 5 to 6 years. Now, dredging, maintenance and capital remain recurrent challenges to the efficient development of the nation's ports, with experts calling on the federal government to urgently revive the eastern seaports to ease pressure on Apapa. Mani Ochobogu, a transport consultant, in an interview with NTA Business News, explained that apart from the Lagos ports, there are also seaports at Warri, Koko, One, Port Harcourt, Calabar and Ibom seaports at Ibaka, Akwa Ibom State that are still at the design stage, with numerous inline dry ports and fuel depots. He noted that the main problem with these ports is that the river channels leading to them are too narrow to accommodate large vessels. Thus, shipping companies find it more convenient to take their vessels to Lagos.
$70 million to $100 million annually. And for a country that is having problems with diversification of the economy, that is a colossal loss by any calculation. The eastern ports provide an opportunity to revive the economy, to revive our shipping industry, to revive even employment opportunities in the other parts of the hinterland. And these are issues that have to be addressed as a matter of urgency. Neglecting those ports have gone on for over 35 years.
He said the channels into these ports and their facilities need to be upgraded, and incentives should be provided to enable them take up more of the nation's maritime business. Professor Uche Uwaleke is still with us in the studios. Prof, you saw those reports when we took the short break. Yes. What do you think about the decline in the prices of food as a result of the Salah celebrations?
Well, that's for me, it's cheering news. It's good to know that during the festive season like this, traders are even bringing down prices as opposed to what we used to experience in the past, when because of the demand, increased demand, you find prices going up, and I think it's rubbing off positively on the inflation figures that we have. The inflation has been trending down for quite some time now. The latest figure we have at 11.4%, from 11.2% in June to 11.4% in July. Now, by this report, it means that there is also every likelihood that for the month of August, we're also likely to also see further drop, in the inflation figure, even though the inflation usually handles about 740 categories of goods and services, in a basket. So it's not just about RAM, the price of RAM or the price of beans. Okay, we also get to see what is happening to, say, the hotel accommodation rates and so on around this time. You also notice back to the stock market that this week too we're also likely to see.
Yeah, I was going to that.
Yes, because of the festive.
Yes,
because of the
what we expect
yes, of
from
course,
the market.
This period is a period where liquidity preference, if you like, use that word, liquidity preference is high. People want to use cash for transactions purposes, and that's why the sell-off is continuing. So I wouldn't be surprised to find the market dipping today. Of course, I told you, although it gained, I'm saying on Thursday, because there'll be no trading Tuesday and Wednesday. Yeah. So Thursday may be profit taking, and then we also Friday. Trading will take place on Thursday and Friday. Yes. So because of liquidity preference, we may find people also, selling to take profit and also to get cash to be able to meet transactions, needs.
All right. Thank you, Professor Uche Uwaleke. That's all that we can take at this time. And on that note, we take a look at how commodities are faring around the globe. This edition of Business Express. From all of us here, have a wonderful Salah celebration and holiday. I am Moplang Dakok.